So retail traders on Reddit's WallStreetBets forum caused one of the most incredible short squeezes in history, an uproar that ended in a well-publicized congressional hearing. But that wasn't the end of the story, as GameStop shares are running again, up more than 450% in the last month. So for anyone who is wondering what the F is happening, in this video, we're going to break down exactly what made the stock go up so much and whether it's a potential buy again. And as predicted in our last video about GameStop, we are almost at all-time highs again. So to never miss opportunities like this, just make sure to hit the subscribe button down below. It would not only mean the world to us, but will also help you find the best deals in the stock market with the newest analysis and news every week. Alright, so let's talk about why the stock is up so much again. And this time, we actually have some nice bullish catalysts we have to address, with the first one being the announcement of a new strategic planning and capital allocation committee to be led by Ryan Cohen. And the crazy thing about this is that Cohen, as some of you may remember, was the spark that ignited the initial short squeeze in GameStop shares. So while being heavily shorted by hedge funds, GameStop added Cohen to its board of directors back in January. Cohen then co-founded and successfully sold the online pet retailer Chewy, with the result that WallStreetBets followers believed he could also rejuvenate the struggling brick-and-mortar GameStop business into a new online force in video game sales. The new committee aims to convert GameStop into a technology business. It will explore several ways of expanding digital channels and adjust its current organizational structure. So with Cohen in this new committee, retail traders that initially drove up the stock price in a short squeeze believed that there was a fundamental reason for GameStop's value to grow. Cohen's success with Chewy gave investors hope that he could replicate it with the video game retailer. What also eventually happened is another mini short squeeze. So after all-time highs in January, short interest dropped to a point where only about 40% of the float was shorted as of January 29. And due to the new efforts of GameStop to enhance their e-commerce systems, traders are bidding GameStop stock back up. To be clear, 40% short interest is still significant enough to spark that mini short squeeze. And it's possible that shorts decided to short GameStop again, thinking it was all over. After all, the stock was still trading more than 10 times where it traded before all of this began. If short interest has increased any since January 29, then this could be a wild ride yet again. However, the question for investors is whether the Reddit crowd has put the stock in a bubble with its excitement, or the business can actually grow online to meet the valuation. So should you put your money back in the stock, trying to ride the momentum, and what does the future look like? Well, sadly, humanity can't predict the future yet, but what we can do is making assumptions based on historical data and look at what happened in January. And last time, we got restrictions. But considering all the negative press it received last time, it's fair to wonder if Robinhood would restrict the buying of GameStop stock again. If it doesn't, it will be interesting to watch just how high GameStop stock can fly. With GameStop reporting its fourth quarter and fiscal 2020 earnings after the market closes in March, investors should have more to go on as well. So if you want to buy, be careful of the risk and watch your position size. Alright, with that being it for today's video, thank you very much for watching. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.